Financial runs are coming for the banks, and you are going to have to print big time amounts of cash to save all these institutions. Check this out, ladies and gentlemen. Right now, Gamestop open interest climbed another 7.3% to 1.4 million contracts. That means that the current open interest for Gamestop is above its 52-week average of 676,000. So currently, the open interest percentile rank is at 92.8%. That means that GameStop had a higher open interest only 7% of the days in the last entire year. In the last 365 days, GameStop is in the 92.8% percentile rank. So this indicates that there's massive demand to trade and carry options positions in GameStop than normal, specifically call contracts, as you guys can see here from the call open interest and the put open interest. So the most notable increase was in July 19th, 2024 options call contracts expiring, which added 57,116 call contracts. Total contracts. 57,000 plus total contracts for the July 19th expiry. But this is extremely bullish, as you can see here on my screen. The open interest in GameStop call options increased by 9.3% to 891,532 open interest call contracts. Furthermore, call open interest is up 11% in the last 5 days alone, compared to its 52-week average of 459,000 contracts. The current call open interest for GameStop is much stronger than usual. As you can see, it is 93% call open interest in the top 93% of the last 365 days. The put open interest has grown 3.9%, about 1/3 of the amount of the call open interest increases, to 498,000 contracts. Furthermore, the put open interest has risen 5.5% in the last 5 days. That is less than half of the call open interest. That also places the put open interest for GameStop higher than usual. But even still, the put call ratio for GME has decreased by 4.9% to 0.6, and anything under 1 is considered bullish. Anything over 1.0 is considered bearish. And noting the fact that it's 0.6, that is significantly on the bullish side, as you guys can see here. 1,389,000 total open interest. Of that, 891,000 of those call contracts are call contracts, which is absolutely massive. Absolutely massive. Almost 2-to-1 the open interest that you're seeing there. As well, if you look here, the call volume today was 344,000. Meanwhile, the put volume, the volume of puts traded today, was only 89.5 thousand. Absolutely massive difference in the unusual options activity all across the board for GameStop, and you're going to see something similar for AMC. And I've got even better. The total number of calls premium bought today was $29.7 million in GameStop call contracts purchased today alone. That eclipses the $6 million that was purchased in puts. That means that either market makers and other institutions are preparing for a major, massive upward movement, or retail investors are greatly speculating on the increase in a GameStop stock price coming in the near-term future. And I will talk about the GameStop tokenized securities and the manipulation that's going on there as well here momentarily. But before I do, I'm going to compare the GameStop interest to the AMC open interest. In a good way, of course. The AMC open interest is very similar to the GameStop, meaning that there is 1.324 million total open interest on AMC. The call open interest is over 1 million, and the put open interest is 267,000. As you can see here, compared to GameStop's 891,000 call open interest and 498,000 put open interest, it is even much more heavily skewed to the call side than the puts, than even Gamestop. And as you guys can see here, I own both. And for the last 3+ years, we have been covering both and am extremely bullish on these stocks in the long term, because we never know when anything is actually going to happen, because things continue to happen over and over and over again. So the options open interest in AMC climbed 4.5% to 1.3 million contracts. Of that, the open interest in AMC call options increased by 5.1% to over 1.1 million call contracts. The put options grew by 2% to 267,000 put contracts. That is around 60% more calls than puts open interest increasing. And the call open interest is up 2.9% in the last 5 days. The put open interest has fallen by 0.7% in the last 5 days. So compared to the 52-week average of 782,000 call contracts, the 1.1 million we're currently seeing is much stronger than usual. Compared to the 52-week average of 654,000 put contracts, the current put open interest for AMC is much lower than usual. So in the last 5 days, the put call ratio for AMC also decreased to 0.3, making it even stronger in the put call ratio than Gamestop, indicating that institutions, market makers, and retail investors greatly believe that Gamestop, and AMC even more so, will achieve higher prices in the near-term future. As you guys can see here on my left, take a look at that Gamestop after-hours price action. Take a look at that. You can see that. Hold on one second. All right, my little one needs me, so I'll make this quick. As you guys can see, both Gamestop, AMC, and COS all kind of blew up here. Not blew up, I should, but went up a substantial amount in the after hours, right? Blew up is something I'll save for when we're seeing massive price increases. But as you can see here from the screenshots, GameStop was capped at $29.99 because, of course, large, high-frequency trading algorithms don't want it to exceed $30 to keep those 56,000 call contracts at the $30 strike out of the money. You see the same thing here going on with AMC, the same pattern, and also a very similar, almost the exact same pattern in COS. So AMC, GameStop, and COS derivatives baskets appear to be moving, and this is because the ETF and derivatives baskets are closing their failures to deliver, or delivering on their failures to deliver of the past, and covering their short positions or rolling short positions and swaps. There's no way that retail investors could ever move 3 stocks in this way at one time. This is the definition of high-frequency trading algorithms that you're seeing right there. You can see it in GameStop, AMC, and COS in their upwards movement in the after hours and throughout the day. So specifically stating this, you guys can see now that that's out of the way. Now let me scoot this over here for you guys. Microsoft, Tesla, and GameStop tokenized stocks are being launched by Bakkt. Bakkt has listed a new range of tokenized securities, supposedly backed one-to-one by stocks of some of the world's largest companies. And of those, of course, is GameStop. Now, why would they be doing this, you ask? Because they've done this in the past when they were hit with massive losses in their short positions. As you can see here, they issued tokenized securities on GameStop and AMC via Bittrex and FTX, and this occurred on the exact date on which they needed them the most, the date that they pulled the buy button from retail investors and did not have sufficient shares. So, January 28th, 2021, they issued Gamestop and AMC tokenized securities and pretended as if they were backed one-to-one, when in reality, we all know from the insolvency and bankruptcy balance sheets that were released on both Bittrex and FTX upon their insolvency, both companies, they didn't have a single fucking share of AMC or GameStop. Yet combined, they claimed that they had billions, over a billion shares of AMC and GameStop. So they exceeded the float of AMC and GameStop just in these securities alone, these tokenized securities that you guys are seeing here. So the tokenized stocks value is based on and collateralized with the underlying asset they claimed. A traditional security, obviously a stock, and the value of the digital asset is determined by the value of the stock. They are collateralized by an equivalent notional amount of the traditional security, i.e. $100 of the debt derivative would be collateralized with $100 of the stock. So this allows tokenized stocks to mirror the economic performance, right? Tokenized stocks may also include leverage as well as long or short exposure. But we proved when both of these companies, Bittrex and AMC, went insolvent due to the Alameda chaos. As you guys can see, Alameda Research was directly invested in Bittrex and, of course, FTX. This is not a conspiracy theory. These are facts, as proven by the Alameda Research and FTX Ventures portfolio and the balance sheets that were released upon these companies' insolvencies. Yeah. My 2-year-old's on the toilet and she needs help, so I'm going to make this really quick. That's hilarious. All right, give me 1 minute. I'm going to speed read this. Okay. Crypto exchange Bittrex filed for bankruptcy. As well, you guys know, FTX did as well. Less than a month after Bittrex was charged with operating an unregistered exchange by the SEC. The bankruptcy comes less than a month after they were sued by the SEC for operating an unregistered exchange, brokerage, and clearing agency. They were well known for tokenized securities, which actually hold the underlying asset they claim, right? Which is very similar to exactly what you guys are seeing now here. So these could easily be used as fake share locates by broker-dealers against heavily shorted stocks such as AMC, GameStop, and COS, and they were the same ones that were issued on January 28, 2021, the same day that these were made position close only by broker-dealers like Robinhood, IBKR, Webull, in conjunction with Apex Clearing and Citadel Securities. These are no longer allegations, these are facts. So that being said, with further research, one could easily find out that one of the most interesting points is that depending on the exchange, tokenized stocks may or may not have collateral behind it. The tokenized stock without collateral is a synthetic security that the crypto exchange or intermediary writes into the existence on a blockchain somewhere. Therefore, blockchain is not the answer because they can just write these into existence without actually having owned the security. And we know this to be true from the balance sheets of Bittrex and FTX that we have shown on this channel before, that I didn't bother pulling up right now, but other people actually did. And I believe I've got it up here somewhere. I know I do, actually. I know I do. Let me get it. It's in my bookmarks. But we've even got the one from Bakkt. And we have proof here that the one from Bakkt is all lent to them. They don't actually have those shares. Here's bookmarks. And we can see that they're borrowing them because here, @Herb_83 has the balance sheet of Bakkt. And I showed you guys the balance sheet of FTX and Bittrex and the fact that they never owned those shares when they went insolvent. So basically, Bakkt has $40.5 million worth of third-party securities and only $73,864 of their own securities. So over $40 million worth of assets are borrowed and backed by GmbH, which we guys have known of, also the same ones that were lending out the securities to FTX and Bittrex. So, ladies and gentlemen, this is not a conspiracy. These are actual facts, backed by numbers, backed by balance sheets, backed by insolvent companies that have already gone bankrupt, including Bittrex, FTX, Melvin Capital, Tiger Capital, and dozens of others of brokerages and banks like Archegos, family offices, hedge funds, banks like CS, right, Credit Suisse, and this is going to continue. UBS now holds those legacy costs, and this is something that is very likely to make me and many other retail investors filthy fucking rich. So on that, I got to go take care of my kid because she's in the bathroom. Cheers, my friend.